On the 1st of June 2022, BYD's stock price was sitting at more than US $80. Today, well, it's not doing so well. It fell to below $40 last month. It's now risen back to 47. But it does mean that BYD's stock price has been battered relentlessly over the past 6 months. Now, there's no real good reason behind this. I mean, BYD's rise has been meteoric. They have doubled their car sales, more than doubled them, and they're now considered the largest EV manufacturer in the world. Now, are they technically? Not really, but the race is certainly on with Tesla this year for who will be the biggest. It's a good chance by the end of this year, BYD will produce more electric cars than Tesla. Now, there is a key reason for why BYD's stock has gone down, and it's all to do with the bloodbath in China. BYD is so heavily reliant on the Chinese car market that investors have been spooked. So that's fair enough. Well, BYD's founder and president or CEO, Wang Shanfu, has said that he will buy back BYD stock in order to reassure investors that the company is headed in the right direction. That BYD stock has, possibly a long way to go back up. Now, will this happen as a result of his share buybacks? Is this a good decision? Would it, real serious investors see BYD's decision to buy back its own stock as a good thing? Well, the answer is actually no. But there's more to this story. Hello, my friends. Welcome to the channel. I'm Sam Evans. You're watching The Electric Viking. It's great to see you. If you look on the website TipRanks has kind of an amalgamation of different analysts and their expectations for a stock. From the, I believe, 25 different analysts polled for BYD's stock, whether or not you should buy or sell, the majority of them say you should sell immediately, which to me is a bit of a surprise considering that BYD's stock appears to be, right now, incredibly good value. I think it's best value that it's been for many years. However, there is one analyst who says that no, ignore these people, you should buy BYD stock immediately. Now, her name is actually Eunice Lee. She works at Bernstein, and she says that BYD is a definite buy. A very, very high buy rating she has on the stock. Now, all the other analysts say that they believe BYD's stock price will continue to fall to approximately $30 from its current position today at $47. Now, that would be a big drop, right? Now, Eunice Lee, I actually agree with her, but to be fair, her success rate with her tip ranks and stocks is absolutely horrendous. She's one of the worst investors on TipRanks website out of about 5,000 different advisors. So yeah, we can't really go off her expertise, unfortunately. But I think if you're watching this channel, you're probably pretty well educated on the car market. You're probably pretty well educated on the battery market. You're probably pretty well educated, probably more so educated than a lot of investors. A lot of these people who are advising against buying BYD. Because personally, I think BYD is a remarkable price right now. Now, I don't like what BYD's founder, Wang Shanfu, is doing. Generally, when a company buys back its own stock, it's because it doesn't know what to do with its own money, that's why investors see it. Investors almost never see buybacks of your own stock as being a positive. Very, very rarely is that considered a good thing. Obviously, Wang Shanfu, he sees things differently. He believes that this will reassure the market that actually BYD stock is secure and safe and stable and all those sorts of things. So as a result, he has proposed a share buyback to boost investor confidence. Now, when this was met by the market with pretty lukewarm kind of response, Wang Shanfu actually doubled the amount. He went from RMB 200 million and he said, well, okay, if no one cares, then I'll double the amount to 400 million RMB in stock buybacks. Now, this has come sort of in response to the Oracle of Omaha, Warren Buffett, selling huge amounts of BYD stock. Now the company Berkshire Hathaway has actually had one of its best quarters in history in the fourth quarter of last year. It's sitting on a stockpile of, I believe, more than $100 billion, ridiculous. But over the past 12 months, Berkshire Hathaway has basically trimmed its BYD stock. It sold BYD, I think, about 6, 7, or 8 times, consecutively over the past 12 months. It does still own a lot of BYD stock. It's only sold about, I believe, 30% of its initial holdings, which was, you've got to admit, one of the best investment decisions in Berkshire Hathaway's history, the history of the company. Now, Warren Buffett and Charlie Munger flew to China back in 2008, and they purchased BYD stock back then for an incredible bargain, and they've made many billions of dollars on that very wise investment. Now, BYD actually received a personal letter from Wang, the CEO, on this 22nd of February, in which he proposed that the company increase the amount of its share buyback from RMB 400 million or 55.6 million US dollars to around about 110 million US dollars. Now, that's a pretty tiny fraction of BYD stock. It's not really that significant. But as a result, BYD stock has bounced back by a few percent. BYD shares had fallen a further 7% since December 6th last year, while the Shanghai Composite Index has gained about 1% and the Shenzhen Composite Index has fallen 4%. So BYD stock has fallen a bit faster than the overall Chinese share market. Now, Wang says he is doing this with the goal to better safeguard the interests of all shareholders of the company, enhancing investor confidence and stabilizing and enhancing the company's value. Wang's proposed share repurchase method is to be carried out by centralized bidding transactions, and the upper limit of the price of the repurchased shares will not be higher than 150% of the average trading price of the company's shares in the last 30 days of trading. Now, where are the company getting the funds for this? Well, the source will be the company's own cash, and the repurchase period will be within 12 months from the date of the company's shareholders' general meeting, considering and approving the date of purchase program. Now, to me, all of this is not really that relevant. I think that obviously saving face is important in China. And this is a little bit about this is about saving face. Ultimately, what matters the most is the performance of BYD. One thing worth keeping in mind here is BYD have begun using robots, as in humanoid robots, on their production lines. That began apparently within the last few weeks. NIO are doing the same thing as well. BYD are also doing something which is going to be very scary to automakers. They say they are going to basically essentially take the sword to legacy auto in China this year. So BYD have reduced the prices of in fact, every single model of car that they sell, aside from, I believe, their supercar and their super expensive Yangwang U9, which is a $150,000 US luxury electric SUV. But they've discounted the prices of every single model of car they have. Internal combustion cars, not entirely, but they're plug-in hybrids. They've slashed the price of those to be below a Toyota Corolla. They've slashed the price of the BYD Dolphin, their most popular electric car, to be now $13,000 US starting price. BYD is saying, you know what, we don't care that much about profits. We've made enough profits last year. We're gonna just basically create a bloodbath here in China. We're gonna basically cause probably some of these other legacy automakers to go bankrupt in China as well. Now, obviously, Mitsubishi, they've run away from China within the last few months, declared bankruptcy basically in China as well. Jeep as well. Now you've got other other luxury car manufacturers in China who have basically just gone bankrupt within the last few weeks. I reported on that here on the channel. So BYD is saying, you know what, we don't care. We are going to essentially reduce prices to whatever point we have to take more market share, to get rid of some of our competition. I'm convinced BYD will be the biggest car manufacturer in the world by 2030. But what's going to happen to their stock price between here and now? Well, I would say don't invest if you're worried that you're going to have some ups and downs. It's going to be doing what Tesla stock does, up and down, up and down, up and down. You have to have a strong stomach to invest in the EV sector. But right now could be the greatest opportunity in the next 5 or 10 years, whether that's Tesla stock or BYD stock. I think both of those companies are going to be the two biggest automakers by 2030, but I could be wrong. What are your thoughts? Thanks for watching.